Welcome back to another excuse me, the Traders Lounge YouTube video. We're doing our weekly recap for this week's trading session, trading week. I do have the hiccups. I just got the hiccups like out of nowhere, so um, forgive me if I'm hiccuping. But we're gonna dive right into it. So I took a lot more notes and I broke down my trading session, my trading week. I wrote down, took notes. I wrote down how I felt, what I thought I could improve on, what went well, what worked, and what didn't work. So I definitely did a better job with journaling this week. I'll definitely say that I'm proud of myself for what I did with journaling, and I'll show you guys. I have my weekly notes right here, and we'll talk about that. Um, so I took 2 trades this week. Both of them were losers, and that's okay. But what I really want to talk about, what I really liked, what I did in this first trade, we're gonna talk about it because I felt like I did, even though it was a loser, but I did something really well in it, and I wanted to share that with you guys. So this first trade, um, I think I put the date as I closed it on the 8th, not when I opened it. I think that's what I've been doing. Like whether it's a win or a loss or a break even, I think that whatever date I put, that's the date that it was either a win, loss, break even on that day. So this trade here, entry at break above the 50 MA. So that is something that I've done differently is I broke out the 50, right? Why did I use the 50 as my entry instead of just relying on the candlestick pattern or relying on getting in at the zone? The reason why is because price is out of support here, as we mentioned before earlier in our last weekly recap. That right down here, I was going to point my finger, but right down here, this area is support from the past, right? So if price comes down, bounces off of this area like it did, and it breaks above the 50, there's a chance that price is going to continue up, which was what I was looking for to happen in the market, right? So I got it once price broke above the 50, I got in the trade. I took the trade. So once I took the trade, I had my take profit set here at this 150.5 area. I took profit here for my first, I closed half, I'm sorry. I closed half the trade here and I had my full TP at this 152 area, right? This right? So once I saw a price broke above the 50, I was like, okay, like, we're going for the uptrend, right? We're in an uptrend. That's what I was relying on. And price made a higher high. I mean, yeah, a higher high. Price, this is a low right here. Lower, you got a lower low here, lower low, lower high, I'm sorry. Lower high, lower high, lower high. Price comes down, bounces off the support area, breaks above the 50. That's confirmation right there to get in the trade. Price makes a higher low, a higher high, takes out this high. That's even more confirmation, right? So price then comes back down. I'm seeing it here is wicking, so I'm okay. This looks good. It's wicking off the 50, it's rejecting the 50, rejecting the 50, and then I can stop hunted out. I mentioned that in the live stream we were on Wednesday that price came, stop hunting me out right here. And I had my stop loss right here in this area. I could have had my stop loss down here, but the risk to reward ratio would have been completely off and it wouldn't have been worth it to even take the trade. But this is a pivot here and this is a pivot. This is a valid pivot. So that's why I got my entry here and I put my stop loss right here. The price ended up coming down, stop hunting us out, and we lost this trade. But I didn't lose the trade completely. I did walk away with money. I did walk away with some profit, I should say, rather, because I took half, I closed half the trade right here. And I think I did lose money in this trade. I did lose money. I lost money in this trade. But I like the fact that, like, I didn't even think about it. It was on instinct that I pulled out the 50 and I said, okay, price breaks above this 50. I'm going to take the trade for a buy because it bounced off the support. And if it's gonna keep continuing going down, it would reject this 50, and that's how I was thinking about it. It would reject the 50 and continue to take out this low and make a lower low, or like just consolidate in this area. But since price broke above the 50, this is on the 2-hour chart too. Price broke above the 50, went back up, came up here, and then just it came down, stopped me out. But I was really proud of myself, like how I did that, and I just thought about, I was like, wow, like I really just like off of instinct, like I just broke out the 50. I just knew to like just do that. You know what I mean? So took an L on my trade, but it's all good. We learned something, so that's a good thing. Now this one, this is a bad screenshot. I'm just looking at this now. So I took this trade the next day on the 9th. Let's see. Yeah, this is gonna be for a sale. Price book below EMA for the entry. Actually, let's go over the notes that I took on for the first trade, and then we'll go in to trade 2. So trade 1 was GBP, JPY demo. I went in for a buy, New York session. Entry was break above 50 MA on 2-hour chart. I chose to enter at break above 50 MA because price bounced off of support area. The break above was my confirmation of price heading up, right? TP closed half the trade at midpoint, and then the exit was price stops out other half for a trade for a loss, which I explained. I have an overview here, so I wrote once price broke the 50 MA to the downside, I should have closed the trade for smaller loss only because I used the 50 MA to get in the trade, need to use the 50 MA to exit trade. And that's another thing I was looking at before, was that once price broke here on this candle, I should have just closed it. And I would have walked away with a small profit versus like a loss as price coming down and stopping me out. And how I was thinking about it before was like, okay, I use the 50 MA as like a doorway. Thinking about it as a doorway. I use the 50 MA as a door to get in the trade, to get in the room. You know what I mean? And so I should use the 50 MA to get out of the trade, to leave the room, use the same door I came in. You know what I mean? Instead of having it take me out for a loss. This is my entry in the door, and I should have exited out the door right here. That's just how I thought about it, how it just made sense to me like that. So now that was the first trade. The second trade that I took was on GU, and I took it for a sale. Entry price broke below EMAs on 15-minute time frame. So on the higher time frames, price had already broke down below this zone, as you can see, and was coming back to retest, and it was consolidating right here. So I said, okay, we're above the 15-minute EMA. I want to wait for it to break down below, and then I'll enter the trade. So I missed when it broke down here, but I still entered the trade right here because we were still below the the EMAs, but then price broke above the 8 EMA and came up and stopped me out. So we took an L on this trade. Also, I have my stop loss in the right spot. Also, I'm thinking about it, the doorway analogy, as in like I could have closed the trade out here. That would only be if like I was looking at it. Same thing goes for the trade on GJ. If I was looking at this at the time, then I would have closed it. But if I wasn't looking at it, there really isn't a way that I can, have gotten out of the trade. So that's that. We got stopped out here. I have my TP set at the next zone level, about 100 pips, 131 area. Price comes up and just stops us out, right? So entry, exit, price stops me out as it breaks back above the EMAs and makes a high or low. Overview, I didn't give price some breathing room with my stop loss. I should have placed it higher based on 2-hour time frame instead of 15-minute time frame. So that's another thing. It's better I realize that I should be entering on the 15-minute, but I need to put my stop loss based on the 2-hour time frame because 15 minutes too close, it's too tight. It's going to be too tight of a stop loss. But I was thinking that I think I had put my stop loss, I had looked at where my stop loss would be on the 2-hour chart, and I thought that the risk to reward ratio wasn't good. So I put it based on the 15-minute. But after I got stopped out of this trade and I was looking over it again, And I went back to the 2 hour time frame, and I saw that if I had placed my stop loss where it was supposed to be on the 2 hour time frame, it still would have been a little bit over 2 to 1 risk to reward ratio, which is what I'm looking for in all my trades, is 2 to 1. So that's something that I caught for myself, is that I need to put my stop loss, enter on the 15-minute, and I need to put my stop loss based on the 2 hour if it's still going to be a 2 to 1 risk reward ratio. That's what I thought. So some more notes that I took was, what did I do well? One thing is being patient with my setups for entry and only taking trades during my session. So there have been times where I would see, like right now, it's like 10 o'clock at night and it's not my trading session, but I would see price setting up for a good entry. But I just wouldn't take it. I would tell myself, like, it's not my trading session, I can't take this trade. And I've been becoming more disciplined with not just trading outside of my hours. I can trade between 6 a.m. and 1 p.m. Those are the times. Between those times, I can enter it into a trade. Also, having confidence in my entry. Even though I did get stopped out in both of these trades, I did have confidence in both of my entries. I was not hesitant. I did not second guess myself. I didn't think about it. I knew that, okay, if price breaks above this 50, I'm getting in for the buy. And then same thing here. Price breaks down below the 8 EMA, I'm getting in for a sale. I was confident on that and I did not hesitate. So that's another thing that I did well. Also, being okay with getting stopped out and understanding that that doesn't make me a bad trader. Losses are going to happen. So even before, when I started trading a couple of years ago, and like even last year, even earlier this year also, I used to get like upset, and I still kind of do, but I'm working on them, getting a lot better, which is why I put it in, the list of what I did do well. Is when you get stopped out, it doesn't mean that you did something wrong. It just means that it did not work for that specific trade. It doesn't mean that you're a loser, doesn't make you a bad person, doesn't make you a bad trader. Losses are going to happen. This is a game of probability, and that's how I have to think about it. As long as I keep trading the way that I'm trading, and I keep doing what I'm doing, repetitive day in, day out, and stay consistent with it, the wins are going to come. There will be losses, and the main thing about taking losses is to keep your losses small and just keep your wins bigger. And I realized that if I keep my 2 to 1 trading plan based on my rules, I only take a trade if it's 2 to 1 risk to reward ratio. If I keep that, I will be a winner. I'll come out a winner over a series of trades because my profit is 2 and I'm losing 1. So I'm over half, you know what I mean? So I'm making more money than I'm losing if I keep that 2 to 1 risk to reward ratio. So yeah, even though I lost, last 2 trades, the next trade that I win is going to cover my losses like 2 times, you know what I mean? So it doesn't really make a difference if I lose this trade. If I lost 2 trades in a row, the next one could be a winner, and then I'm in the green, you know what I mean? I'm in the green for between the last week and like the next week of trading. So that's why I have to think about it. It's like, I used to beat myself up like, wow, I lost, like what did I do wrong? But then you got to stop yourself and realize that there's nothing that you did wrong. It's just probability. That's it. But traders think that they're doing something wrong, and they get stuck in this endless cycle of just like changing their plan and changing the way they trade and trying to find a holy grail. But there really isn't a holy grail. The holy grail is just being consistent and persistent and disciplined in the way that you trade. That's the holy grail. Also handling my emotions. I just really talked about that. Just staying focused and just being consistent with your setup, whether you lose or win. Even when I win a trade, I'm focusing on not like, oh my gosh, I won. I tell myself, like, I did a good job. Like, okay, my entry was good. I was good with being patient and like holding the trade, taking profit where I'm supposed to, which I talked about in a couple weeks ago when I went over the wins that I had. So I did a good job with handling my emotions. Also, what can I improve on? Patient to wait for setups. I am doing better with being patient and waiting for my setups, but I could improve on that. It can be better. You can never, patience is like a never ending skill to have. Like, that's the best skill to have. You can never stop working on being patient, because the more patient you are as a trader, the better trader you're going to be. Because that is the number one skill that you need, is patience. You don't want to be what do they call it? a happy shooter, trigger happy. You don't want to be trigger happy in the market. You need to be a sniper. You need to sit on your hands, trade when you're supposed to trade, get in when you're supposed to get in, get out when you're supposed to get out. And that's it. Also, using my tools to trade, not just relying on one way to trade, which also goes back to this GJ trade that I did. Of me using the 50, right? Because even before a couple of weeks, I've been saying to you guys, like I took all my indicators off. I don't have any indicators. I'm trading naked now. But I pulled this 50 out of my tool bag because I needed to use it. I needed to see where was the resistance for price. You know, where is price going to flip? Where are we going to flip to buys? And that will be the break of the 50 MA because we bounced off the support area. And the only way for me to see that, for me personally, the only way for me personally to see that clearly is if I break out the 50 MA. So that's why I took that out and I used it. And I should not be ashamed or feel any type of way because I took off all my indicators, but I used an indicator today, or I used an indicator during this trade. It's a tool. Use your tools. All indicators are just tools at the end of the day, and it helps you sculpt like your trading and how you trade. Like they say, trading naked is the best indicator, but sometimes it's a tool. You need a tool. How can I explain this? So if you're building a house, right, and you may need a saw to cut wood, you may need a hammer to hammer in the nails, you may need a screwdriver to screw in the screws. You're not going to use a hammer to screw in the screws. You're going to use a screwdriver to screw in the screws. And in this case right here, I needed a screwdriver. I didn't need a hammer. You know what I mean? I need a screwdriver so I can see where price is going to break above and flip to the buys. So use your tools in your tool belt. Don't be ashamed to use indicators to help you get in and out of trades. So that is that for my 2 trades that I took. I'm so proud of myself that I actually broke this down for you guys the way that I did. I'm very extremely proud of myself. So this works as far as me journaling, because I told you guys I was trying to figure out a way that would help me journal better instead of like writing or instead of just taking screenshots of my trades. So I think this really worked and I'm going to continue to do this. So those are only 2 trades that I took. Let's break down the market really quickly. Let's see, this is GU. Let's take a look. We'll go full screen. So this is what I was looking at actually on GJ. This is a 2-hour chart. This is where price stopped me out, and we're continuing down, and price made a higher low right here. We can we can put this trend line right here. We can see price bouncing off. It looks like it's making a wedge. I'm seeing a wedge here. And I had this box up because I was seeing price consolidate, but price broke out. And I was gonna take the trade. I'll put this back. I was going to take the trade if price broke out and retested, but it broke out, but the retest, it didn't break out the way I was expecting it to break out. So I couldn't really get in this trade. Because I had, let's see, I had the consolidation area, the box based on this wick right here at the bottom right here, and then the top was right here. With price, as you can see, like peaked out, came back down, and I just didn't feel comfortable getting in, so I didn't get in. I just let it ride. I let it go, and just told myself like, and I won't be holding anything over the weekend. So we're seeing price coming up now. It'll most likely come up and retest this area. Once it comes up to this area, we'll take a look to see if price wants to break above and see what it's going to do up here, or we're going to reverse, check for any patterns and look for a reversal pattern down to the downside. It depends. For me, I don't like getting into the trade I don't like getting into the market rather when price is playing around in this middle area. I want to see something happen here. Like for instance, right here. Um, this is also another thing that I'm trying to get more comfortable with is taking trades, reversal trades right here versus waiting for it to break through, retest, and head up. I I need to get more comfortable with taking trades like this because we broke out, came down. The entry would have been somewhere here just to be conservative, but for an aggressive trader, it would have been right here. Head down to the 1 hour, we can see, yeah, on this wick how it retested that wick right there. This is a 15-minute. So even like just a break down below. So this would have been, so price came, broke down below. Entry would have been in this area somewhere. Stop loss right above here. And I know I talked about the stop loss being based on the 2 hour. It's the same. If it looks like this, it's still the same thing on the 2 hour chart. Where we at? You see, like there's the reversal. Now, if we have like a bunch of candlesticks over here and everything, then I would have put it higher. I wouldn't have put it there just based on for the 15. But since the 15 reversed with the 2 hour, if that makes sense. Still at the top here. Right. That would have been the trade. And then TP would have been hit right here. I just want to see how long this took, how many days. So we entered here. One day. That's not bad. That's not bad at all. For 97, that's not bad. One day. That's not bad. So that would have been that trade. That's something that I need to get used to and work on because there's profit there too, right? So like I said, I was looking for it here to take it here, but it didn't look right to me, so I didn't take it. I didn't take the trade. But that's what we're looking on. Look, that's what we're looking for on GJ. Let's go to GU. And almost something similar. Prices broke above this midpoint right here. It looks like some consolidation. This area. So this is a low. This is a higher low. We're coming up. So almost the same thing. Looking to see if price is gonna what it wants to do at this area up here. Is this 133 area? Look for any reversal patterns. Look for any type of consolidation at this area. You know, draw up our box for a consolidation. Look for the retests or look for the breakout. Break down below. Look out for any fake outs. The main thing that I'm looking for is reversal patterns. Like this reversal pattern. This is the evening star right here. This is a reversal pattern. So, and like I said, an aggressive trader would have entered on this wick, and conservative somewhere down here. But I think that's a little bit too far. So this would have been an aggressive trade. I don't want to go down to the lower time frames, but this would have been an aggressive trade. So let's head up to the 4 hour. This also is an area. I believe I was talking about this in the last weekly trade recap, that this was a demand area that we were looking at. That both GJ and GU are at some very crucial levels right now. Yeah, so it was supply, and then we broke out here. It's coming back down now, and now it's testing this area again right here. This is the daily chart, and we made a low here, came up, and now this is all an extension right here. This is an extension. So like this is a small extension retracement. Look at this is a long extension right here. So we could potentially see, I think I talked about this last week also, price retrace up to about this area here, potentially. potentially. I think I mentioned this on GJ also. Yeah, GJ has the same thing, price potentially coming up here. Let's take out this Fibonacci. We have this golden zone right near this area. So we'll see. Should be a very interesting month, honestly, based on these two things that we're seeing right now. This retracement level, and then we're both at demand. We're at demand / supply level. New demand, old supply level, and we're at testing out some, trying to see if price will get up to these retracement levels. So the next couple of weeks should be very eventful in the market. So yeah, let's keep a good lookout on these two, GU and GJ. All right, so that is it for this week's weekly trade recap. I hope you guys enjoyed it, and I will see you in the next video or live stream, whichever one it may be.